Good morning. This is your weekly update with Jim Stewart. I'm the Chief Investment Officer here at Worth Asset Management. Today is September 18, 2023. And I'm going to go over your three threes for the week. I'm going to go over our top 10 major asset classes, their performance, and how we're positioned. And there's been some movement this week, so we got to pay close attention to that. And then I'm going to take a look at the chart of the S&P 500, and are we still in that support and resistance zone? And then I'm going to look at the top three market movers for the week. So let's jump on in.
Okay, let's go over the top three market headlines from last week. The major U.S. stock indexes were little changed for the week, trading in a fairly narrow range. That's in keeping with the market's mostly flat profile over this summer. Well, the first half of this week was pretty non-eventful. The second half featured plenty of market-moving events that I'll go over in a second, capped off with a quarterly options and future expiration date on Friday. Those downside moves put the S&P 500 and NASDAQ below their 50-day moving averages. The world index was the winner for the week, driven mostly by its large country allocation in Japan, which is a favorite asset allocation for us. Oil. The price of oil climbed for the third week in a row, which is sitting now at a 10-month high. We've eclipsed $90 a barrel. Matter of fact, we're approaching $92 a barrel, and the price has now climbed 14% over the past 3 weeks. Now let's talk about CPI, which is the benchmark for U.S. inflation, and it climbed at its fastest pace since mid-2022. And it climbed at an annual rate of 3.7 in August and a 0.6 on a month-over-month basis, largely driven by what we just went over, the higher energy prices and oil. When we exclude oil and food prices, the core inflation rose at a more modest 0.3 on a month-over-month basis. The ECB on Thursday lifted their interest rates in an effort to help address their high inflation over there, marking the 10th policy meeting in a row in which it has hiked rates. They are now at the highest levels since 1999. Now, bonds, let's talk about their yields, and they're rising again. Concerns over the potential for further interest rate increases continued to weigh on the prices of U.S. government bonds, and the yield for the 2-year rose above 5% at 5.4 on Friday. So we are 5 basis points from a 17-year high. And then we're going back all the way to the summer of 2006 and the summer of 2007. And we all remember what happened after that. So we've got to keep an eye on this to make sure and where that's headed. All right, let's go over the top 10 major asset classes, their performance, and how we're positioned. On a short-term basis, there was only one change. A lot of it came from the world. It came from a couple countries, United Kingdom and Japan, which drove the world back to a short-term bullish. On an intermediate-term basis, there was only one difference this last week, and that was the small caps in the Russell 2000, which I said last week was teetering, and it moved into the bearish side on an intermediate-term basis. All right, let's take a look at the chart of the S&P 500 and our support and resistance zones. Well, again, we are trading inside of this resistance zone, and we probably will until we get some news that it's going to drive it either up or below this range. And again, not to hound on this too much, but we do have some gaps here that will eventually need to be filled. The market does like to fill those, so most likely we're probably going to fill those sometime here over the next quarter. All right, let's go over the top 3 market movers for this week. On Wednesday, we get the FOMC meeting and their rate decision, and they're expected to hold interest rates steady or another pause. It's a 99% probability, almost a sure thing, that they will pause again at this meeting on Wednesday. On Monday, Tuesday, and Thursday, we get housing data. On Monday, we get the NAHB housing market, and that's expected to rebound slightly from the month prior. On Tuesday, we get building permits and housing starts, and the housing starts are projected to have fallen a little bit over this month. And then we get existing home sales on Thursday, and they're projected to be about the same, slightly up from the month previous. On Thursday, we get the Bank of England policy meeting. So they're also having their policy meeting, and they're expected to raise their interest rates by another 25 basis points to 5.5, which would put it at its highest rate since 2008. However, there is talk now, since we're pausing, they are starting to take that initiative, and they may even now pause and wait till the next, and so they can get some more inflation data over there. All right, that's it for this week. Thank you for joining us. Our next update is Monday, September 25th. Thank you for subscribing, following, and liking us, and we shall see you next week. Have a great week trading.